Hey everybody, welcome back to our YouTube video series. Love shooting these videos for you guys. Joined as always with Ashley. Ashley, how's it going today?
It's going well. How are you?
Good. It's a hot day in DC. So want to talk about, it's June 1st. Want to look back kind of on May. We posted a chart on social media. Check it out. Kind of really wild month, of course. And if you woke up, fell asleep for 31 days and woke back up on June 1st, you'd have missed a 0.1% gain, but lots of volatility within the month. So we wanted to talk about behavioral biases, one of our favorite topics, lots of books that we like on it. And of course, blog posts that we've posted. So why don't you get us started on kind of the things that we've seen and some of the things that you've thought over the last month?
Yeah, like you said, the market's digested a lot this month. Inflation, rising prices, cost of living being higher for individuals, the war, rising interest rates. So I think something that's important to touch on is that everybody has their own individual reactions to that, but oftentimes let maybe their panic or anxiety or being nervous derail some of their long-term and initial thoughts on maybe their relationship with investing. So, Brad, do you want to talk about some of the things we've seen with some certain individuals about them kind of letting that impact their maybe long-term financial plan?
Sure. So we've always talked about this before, but if you're going to invest $1 in anything greater than an FDIC insured bank account, there is risk involved. We saw bonds as we start today, the first day of quantitative tightening after being in an accommodative Federal Reserve environment where you had quantitative easing for so long. So even the bond side of your portfolio has some risks as it relates to interest rate risk. So understand your timeframes, I think, would be the number one thing that we talk about with most folks. Also, you have hindsight bias where, you want to have maybe sell or maybe buy or on either side of that. So understand your allocation, understand your risk appetite. And if you have too much risk on the table, always can dial that down, but you want to stick to the basic core of your financial plan and why you're investing in the first place, understanding what it's for. And like we said, if it's 3 years or greater or something you're saving for retirement, your child or grandchild's college education, 18 years away or 15 years away, the daily fluctuations of the market shouldn't let that go past you. Also want to point out that we are technically touched a bear market within May. A lot of people do have a bias from before previous cycles of market crashes, .com bust, 2008, of course, and COVID. So you do have kind of these biases to past events. So if you're going in with one of those, understand that maybe you want to take less risk on than in those situations before, and maybe you can't handle those types of things again, which is obviously fine because we certainly don't want anyone to lose sleep. Money is not supposed to be causing stress. It's supposed to be something that you can use as a tool to achieve financial freedom, not the opposite.
Yeah, great points. And I think another important point is that if you don't have a financial plan and you haven't until now is really a great time given just the month of May and seeing the roller coaster of volatility. So take this opportunity. If you didn't have a plan that you were sticking to and you were maybe just winging it for yourself, might be a great time to talk with a financial professional to set up a long-term, more solid plan for yourself and your retirement.
Yeah, I think that's a great point. We posted a statistic on our blog that 70% of folks do not have a financial plan. So if you don't have a roadmap or a guide to know where you're going, it's really hard to make mistakes and derail your personal financial future. So make sure that you can segment out these biases for yourselves and put your best foot forward to create a plan for yourself to have financial freedom.
Great. Well, let us know if you guys have any questions. Email us at info@TrumanWealth, and we are here happy to help. If you're looking for someone to talk to during this time, let us know. And we'll see you guys soon.